The stability of an art market depends on how the gap between the investor and the collector is bridged. Investors need to turn collectors, hold on to their artworks for a substantial period, and enjoy long-term benefits of their investment.
Right, Ramneet, we just heard what Philip Hoffman had to say. He runs a successful art fund in the UK called the Fine Art Fund. Also, the CAGR figures that you saw in the first segment was research done by the KAPIL Art Fund, which is based in India. Do you see yourself recommending an art fund to your HNI clients?
I think two things with respect to that there. One is the point that Nad made that, if you want to collect art, even if you look at it as an asset class, I think you need to enjoy it. You need to, have a passion for it. That said, I'm also not a votary for, just taking a dive in and initially buying whatever appeals to you. I would definitely go for more informed, buying, because, you realize you very quickly collect works which may not have any abiding either aesthetic or financial value. And to that extent, if you take professional advice, it could be from an art fund, it could be from a gallery, it could be from artists themselves. I'm all for that. So I think the key issue with Indian art, as I see it, is that, if you see from, let's say, August, September of 2006, you stop seeing irrational bids for Indian art. And everybody, collectively celebrated the fact that, the Indian art market had come of age. I don't think any market comes up the curve collectively. If there are new people coming in at the fringes, there will be, people who bid irrationally. The fact that, that was not happening in Indian art was the first sign, and I'm talking about, way back in 2006, that new collectors were not coming in. If you're trying to create a collector base, then I think you should be a little more discerning with respect to, who you're selling to. I just think that, at that time the momentum was so strong and there was so much demand, that, galleries were just happy selling. And I think that is what we need to correct, and which is, the point Nenad made, Kapil made, we need more art education, and suddenly you'll start seeing that, the imbalance that we perceive between collectors and investors, that will get equalized.
Kapil, isn't price the determining factor though at the end of the day? Because all three of you have made the point that art as a market in India is very nascent. So to develop aesthetic taste for something that's been there for centuries could take a lot longer than actually throwing these CHGR numbers at them on select paintings. I mean, when you look at returns of 20, 50, 100%, would it not be easier to lure someone into perhaps investing in art a lot easier than to by default make them a collector?
I'm very skeptical of people really taking the jump in and, going into art just for investment. Means, I still think you should buy for the love of it. And, means there's a way to start. Means, how do you really start? Take rounds of galleries. That's very important. Just there, pick up any art magazines. Now the good thing is there are a couple of very good art magazines which have come into the market. You look at this new Art India is a great magazine. Take on Art is a great magazine. Pick up the art magazines. Just start flipping through, start reading. Most of the city magazines, whether it's in Mumbai or in Delhi or in Bangalore, they give you details of art shows happening in your city. Go and visit those art shows. Means I think that'll give you a fair idea, and that's how you start honing your skills really.
Right, I guess the crux of the matter is that you need a good art education, whether you're an investor or a collector, but still lots more right ahead in just a bit. Hey there, welcome back to this episode of Artwise. I'm going to quote a figure that's been provided by KAPIL Art's research team. It says that each series at the start of every fund has had at least 10% reinvestment from the existing collectors. Nenad, this one's over to you. That's surely a positive sign, but we are increasing an investor's base. You would eventually see them becoming collectors.
I guess so. The moment you convert investors into something of a passion for art, they're bound to reinvest. And obviously probably it's got to do with some advice also which they get, if they get the right advice and, they feel comfortable about it, in any business, anywhere, customers do reinvest. So it's also a reflection of quality of services people get in terms of reinvestment.
Kapil, you brought up liquidity a little earlier in the show as well. Is the lack of it in this medium perhaps something that keeps people away, you think? Because it's something that you have to buy and just wait. I mean, suppose for those section of people that don't want to go down the route of becoming collectors and just look at it as an investment option, is this a very big entry barrier, you think?
Let me just rephrase this question and say, in the next 10 years, do you think you should be in art either as an investor or as a collector? And the answer is definitely yes. In the next 10 years, the Indian art market is going to go through an explosion because more and more people will be more and more people will come into this asset class. So from that perspective, if you really ask me, I think people should, you got to look at contemporary art, but you cannot really look at returns right now. One of the biggest challenges that I've seen right now in the last 3-4 years has been the prices have just gone through the roof. There is 500-600% growth over everywhere, and that's the difference that I see. The younger contemporary Indian artists have not understood that their prices rose too fast. And one of the biggest things that I hear from artists is, but in 2007 and 2008, early part of 2008, my prices were X and that's why they can't come down. But the world has moved on and it's become a much more cautious place. And the pricing even in the contemporary art market is not very correct. So that is where I always caution people, please be very careful. And I think that is very, very important.
That's right. Unfortunately, 2007 does remain that yardstick for figures for the art market. But Ravneet, I really liked what you said earlier in our previous segment, saying that the galleries should not sell works to people who are clearly in there for investment. But what do you think should be the approach of a young buyer, really? Just very innocently wanting to make a start and probably asking questions which may be very investment oriented.
Through the discussion we've talked about the contemporaries vis-a-vis the masters or the moderns, whichever way you like to call them. In my mind, I don't really make the distinction between masters and contemporaries. So to say that for somebody entering into the market for the first time should buy contemporaries, first of all, the contemporaries are not cheap anymore. So why have we not talked about for new entrants to buy serigraphs, buy prints? We never seem to hear that because commercially, obviously, the commissions on those are not as big. Hard to point fingers. I think it's a collective responsibility needs to be taken between collectors, between gallerists, curators, artists. We haven't really been able to expand that base, and I don't think that it'll increase on its own. So I agree with Kapil that over 5-10 years time you'll see a big change, but the change will need to be brought about. It won't happen on its own.
Right. On that note, we'll have to wrap the show. Certainly, it is a pity with a population of over 1 billion, we just have about 150 collectors and just a few handful big collectors in the country.
Well, enough food for thought. I think that that's us that we could probably look at in terms of our future programming. But thanks to all our guests for taking time out and joining us. And that's it on this episode on Investors versus Collectors. On behalf of Sahar, myself, and our entire team, thank you so much for watching. Goodbye.
Thank you.
Brought to you by KAPIL, the world's biggest delivery-linked art fund. A Bloomberg UTV Pulse initiative.